Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Monday, the 28th of June, 2021. Thank you for tuning in. Now, something big and important happened in the silver market, and I think a lot of people might have missed it. I didn't miss it. I'm watching the silver charts for years. Let's take a look at what it is, and let's get the charts open right here and take a look at this. We're going to focus in on it, and what happened last night, and it's in red. Let me focus the charts in so you can see it. Give me a second, guys. This in red right here, this big, what it wouldn't be called a flash crash, went down about 30 cents very suddenly, the market. And I'll tell you why this was so important. Because of the speed in which it returned to the price it was before. It was extremely fast. It went back. So what I figure happened in my mind, and what I think we're looking at here is, on the side where it crashed down in price, I think what they were doing was they were getting out of the paper silver contracts. They were selling them off, right? Their paper unallocated positions. Okay? And it snapped back. The market snapped back because I think that what caused it to snap back is there's so many buyers out there now. You got 120,000 new stackers. Well, some of them are old stackers, but a lot of them are new stackers. 120,000 is a big number. And, I think that a lot of people had buy orders put in if the price were to drop. They want to buy on the dip, And this is not the way it used to be. Used to be they would settle for paper short contracts. They wouldn't want to settle their positions in real physical. I think what we're seeing here is a lot of the buyers are wanting to settle in real physical silver. And so they're looking for any little dip in the market to jump in and grab a whole big bunch of silver. And they want to take possession of it. It's a different story than it used to be, right? So when they dip the price of silver with using the paper short contracts now, what they're getting is a horde, an actual army or a horde of people that are coming in and wanting to buy that dip. But they're not wanting the paper silver, they're wanting the real thing. And so what this might express into in the upcoming period of time, because it takes time for this to play out, this was massive buying. Okay, so you get one side of this, you got massive selling, paper, and on the other side, massive buying, wanting to take delivery of the real thing. I think what's happening is, I think the Reddit crowd and the 120,000 new buyers of silver, I don't think there's enough silver to go around and cover industrial demand. Okay, last year and the year before, pitiful mining production. It's down, like they were mining over 800 million ounces a year. Now it's dropped down into the 700s. Okay, and suddenly we got all this huge retail demand coming in, brand new retail demand, because people are frightened of the crack up boom that's coming. The Fed and the ECB has put us right on the brink of a crack up boom. They want to hedge against the dollar. Silver is the most is an asset class out there that's most underpriced of everything out there. And the silver market is on the edge of breaking right now. Let me open the charts up so we can move on. What I'm going to say about this is the silver is on the edge of breaking right now, and I'll tell you what it reminds me of. It reminds me of a prize fighter that's in the ring, and he's just been hit a knockout blow. Boom, boom, a 1-2 punch. Bang, bang, right? And he's still standing there. But he can't see nothing but stars. The big question mark is, will he be able to recover from that? Or will he fall right there KO'd? And that's where silver's sitting right now, guys. It's the prize fighter. He's been hit 2 big punches, and all he's seeing is stars. But he's still standing up. That's the silver market right now. It could fall over at any time. What I see there with that dip that happened last night, and the buying that came on the other side of it, is all this time, for years now, the tail's been wagging the dog. The paper market has been determining the price of the physical market. What I see there is that's what it tried. The paper market tried last night to determine the price of the physical market. And the physical market responded and took control away from the paper market and drove the price right back up to where it was. That's what I think we're seeing there, is the first hints that the physical market is taking control over the paper market. And that means the silver market's getting ready to break. It's right on the edge of breaking. The Reddit crowd and all their heavy demand for silver, combined with industrial demand, is just too much. They want too much silver, and there's not enough there. The market's getting ready to break. And this is a terrifying thing if you guys really know what this is about. It can be a terrifying prospect. The reason why is if the silver market breaks and they run out of silver, they actually run out of the 1,000-ounce bars. And that industry is going to go panic and try to obtain it at any price. The silver price shoots up massively, goes up massively. That'll lead to gold responding, gold following. The two follow each other. They always have. You're not going to have silver shoot to the moon. Gold just sit there and say, la da 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 da. No way. Gold's going to follow it up. This could bust the financial markets wide open. It could bust the financial markets wide open. And I don't see where there's a lot they could do about it. It could lead to a panic that could cause a currency crisis, a massive currency crisis that could spiral out of control and lead us into a hyper quick entrance into hyperinflation. In other words, faster than I anticipate. Now, I've been anticipating it sometime in the latter part of 2022 that we'd start to enter into hyperinflation. But this could cause a panic and send us there earlier if the silver market were to break and then the gold market, and the two of them were to shoot up in price massively high. Do a Bitcoin. If they were to do a Bitcoin, well, you know. Okay, so what we got today is we got a silver price of $26.12. This whole thing could break open unanticipated by me. I mean, it could break. It's ready to break. And my forecasts that I've been making over the last few months or 6 months or so don't figure in the silver and gold market breaking and what that could cause. The spiraling chain effect or domino effect that could cause. Wow. Wow, guys. Let's take a look at gold. Gold, $17.79. It's down $1.80. Take a look at cryptocurrency today. 1,384 billions. And we're looking at a Bitcoin price of 34,431. Now, there was a dip in Bitcoin. Yesterday, it was in the 1,200 billions. And the Bitcoin price was darn near 30,000. Now it's 34,000. So that dips over if people had a chance to buy a few Bitcoin. I'll tell you honestly, I think Bitcoin, this bear market might be actually. See, Bitcoin and the cryptos move awfully fast. Everything is in hyperdrive. And we've had longer bull markets and bear markets. The cycle is getting compressed now. So the bear markets don't last as long and the bull markets don't last quite as long. This is in a cycle compression. There's a cycle between bear and bull markets. And it's not spread out as much as it was earlier when Bitcoin was more unknown. Now this cycle is speeding up. It's hastening its progress. I got a chart of that. I'll probably do a show on my Delta Report channel about it. But so this bear market in Bitcoin, and people thinking, oh, I'm going to get them at 20,000 or 15,000 or whatever. It might be already getting long in the tooth. This bear market in Bitcoin, we might be getting ready to zip back into a bull again. It could happen, guys. So if you got some of them at 30,000, now they're 34,000. We might be in the dip right now, because hyperinflation or people not trusting. See, it's all a confidence game, guys. If the silver and gold market break, confidence is going to be lost overnight in the fiat currencies. And, if they sell out of gold and silver in the physical, because nobody's going to want to buy the paper. And here's another thing I got to tell you guys. If you guys got paper gold or paper silver right now, I would advise you to be very careful because it could all become worthless overnight. Because the silver market's ready to break. It could be worth a big fat zero. Any unallocated silver. I would advise you right now, because they've created so much unallocated silver. If the silver market breaks, it's going to break the gold market too. And all of the precious metals in their real form, a coin that you can hold in your hand or a bar, gone. And we've almost seen this. Coin stores are all across North America, and the people that sell gold and silver, they've been short on supply for months. It would just be boom, gone. And then you get all this money out there. The paper, gold, and silver become worthless, and you get all this money out there. Hordes of money. Hordes and hordes and hordes of money. What's it going to chase? You're looking at it right here. Crypto. So how high could all that money drive the crypto market? It'd make 30,000 on Bitcoin look awfully cheap. Okay, Dow Jones Industrial Average. Now listen, guys, I'm not saying this is going to happen right now, but the silver market's on the verge of breaking, and if the silver market does break, see, I don't know how much they got back in storerooms of silver. I'm thinking they're almost out. Maybe they got more than I think. I just don't know exactly. They keep that really tight, how much silver they actually have, or they can come up with. I should say, come up with. I mean, you don't know. They might have a hoard someplace that you don't know anything about that they can dig into, But I tend to think they don't. I tend to think they're on the ropes right now, really on the ropes. Dow Jones today is down 141 points, 34,291. Can't get that lift off, It's waiting for more stimulus. It needs more stimulus. Because that's the only thing that's driving this market anymore. Is stimulus. What a world. Okay, so now what we're going to do, well, I'm going to refresh this and just see where it's at. Okay, we're down 149. Let's take a look now at crude oil. It's off 95 cents at 73.10, or down 1.28%. Take a look at the MOVE index today, 55.58, and it's been slowly chugging upwards now. It made a turn. It was slowly chugging downwards, but now the charts have turned. It's slowly going up. The higher this goes, the more unstable the credit markets are becoming. And this can shoot up overnight. Goes over 80, you starting to get instability in the credit markets. Goes over 100, and man, I'll tell you, it's really They watch this. The Fed watches this like a hawk. Take a look at bonds and rates today, and we're looking at a fairly impressive drop in the yields of these bonds. We're looking at a 10-year, we're looking at a 4.8 basis point drop in yield. And the US 30-year, we're looking at a 6.4 basis point drop in yield, which is fairly substantial today for these drops in yields. Now let's take a look at the US dollar index, and the dollar is it's descending right now, but not vigorously. It's been choppy, you know. There's been a lot of volatility in the DXY today, up and down, you know, but right now it's dropping. It's at 91.78. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.